Welcome back. You're still watching Portfolio Watch, where we're taking a retrospective look at 2018 and the year that it certainly was when it comes to the investment landscape, and most importantly, what lessons we need to learn and implement as we approach 2019. My guest in studio to share some of their insight with us is Andrew Ditburner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Dr Adrian Saville, Chief Executive of Cannon Asset Managers. Now, we certainly got some insight into the financial services sector in South Africa, which has seen its own changes take place, and of course new competitors entering the landscape, but a lot of interest as well in growing beyond our borders in South Africa. But what about the telecommunication space? We know MTN has faced its frustrations across the continent, Vodacom as well as struggling slightly but managing to pick up some consumers, and Telkom just last week seeing significant earnings when it comes to their mobile division, but of course still has some sore spots with regard to government work exposure here. Tell us about your view on Telkom here, Adrian. It was once a firm favorite, what, a few years ago after touching 60 Rand a share?
Yeah, we've rebuilt our position in Telkom at Cannon. I think there's a lot we could touch on, especially given the recent results. It's being regarded as sort of an ex-growth utility. I think it's worth noting that their mobile revenue grew 58% on the year, so that's hardly ex-growth. Mobile is small, but it is making up an increasing and fast-growing component of their revenue on very attractive margins. If you step away from the business, though, and just look at the sort of the broad aggregate, attractive valuation from an earnings perspective, very healthy dividend, those two make immediately an interesting case. But just beneath the surface, Telkom owns a property portfolio called Gyro, which owns about 1,300 properties. Those 1,300 properties, it's a portfolio, exactly that. So it's across the South African, across the country by province, multiple industry silos. So it's all the way, funnily enough, from residential. Telkom has some old legacy residential through to industrial and corporate. And that portfolio, I think fairly conservatively valued, makes up a net worth of about 23 billion Rand. That's something we don't usually take into account as retail investors. Well, it's nowhere in the valuation, because Telkom's market cap is 27 billion. So you've got a 27 billion business with a 23 billion property portfolio, and it appears, in our view, nowhere in the valuation. So we think this is a compelling domestic story. Sure. Some almost sounds like they might pull a Tonguard Hewlett here if all options run out and then let go of those properties. And the CEO has alluded to this, so this is not a big secret. Sure. They've already identified a small set of properties available for redevelopment, ranging from student accommodation to high-end Cape Town residential. I think it really makes for an interesting aspect of this sort of ignored, I think, South African large cap. Interesting one that they can certainly implement there, and of course throws in a certain different dynamic regarding what we've usually seen regarding their partnerships with Netflix, tower sharing with Vodacom. But given the land expropriation bill in South Africa, is that also an issue of contention as to how they might deploy that strategy? As investors, should we approach cautiously there? Look, I think that would impact sentiment broadly. Based on the existing portfolio, we can't see specific reason for concern. Okay. Let's go back to the technology space and maybe even throw in a bit of data tech and just understanding how they also impact the local environment. I'm not sure, Andrew, if you have exposure to either Telkom or data tech before we get Adrian's details regarding why he likes the stock.
No, we don't. So in the telecommunication space, we've got Vodacom. So Telkom, yeah, I suppose it's one of those shares that's been up and down over the years, excuse me. You know, it was a large cap then. I think it almost fell to like a small cap, and as a result, you know, not too many people actually consider Telkom. When you think of telecommunications, it's MTN and Vodacom. Yeah. Because Telkom spectacularly misstepped in Nigeria.
Yes, you're right. Multilinks.
Multilinks, yes. So maybe MTN is going to be the one that in 5 years' time people have completely forgotten about. But yeah, we've got Vodacom. We saw their results out, I think, last week or the week before. They weren't spectacular results. I think the one bright spot is their East African exposure through Safaricom and M-Pesa. But looking forward, if they can roll out their 4G network in rural areas, I think that's probably one of the main areas that we see growth coming from going forward. And then there's obviously on the horizon, the 5G story. But that's a 2019, 2020 story.
Hopefully, if the government policies do get implemented correctly. But very briefly, keeping this with the technology space, data tech is one of those that you're keen on that a lot of us should look into. This is a mid-cap company, right?
Yeah.
That a lot of South Africans don't really understand the details behind their business.
Data tech is, although it's JSE listed, the bulk of its revenue is offshore. It's a hard currency earner, multiple geography, Latin America, North America, Europe, and Asia. The business recently sold off a large part of its holding in Westcon, which was a North American Westcon component. It still retains the rest of Westcon that it has built over the years, along with a systems integrator called Logicalis. Based on valuations using industry multiples as a guide, I think it's fair to argue that Logicalis, which is a profitable, healthy growing business, 17% return on equity, explains Datatech's entire market cap. On top of that, they then still have their Westcon business, the rest of the business that they didn't sell, which we can infer a valuation from the part that they sold to Sinex. And that probably makes up another 16 Rand a share. And then they have 900 million cash on balance sheet, which they received for the sale, and they're using that to buy back their shares and cancel them. So putting that sort of sum of the parts argument together, you comfortably get a valuation figure in the mid-30 rands versus the current share price of 26 Rand. We've been buying in the early 20s, and I think that this is a story that if there is a stock that can double based on just a modest return in sentiment, here's a great example.
That's something we like as investors. You already have our attention, right? We like growth and seeing capital growth and, of course, a constant dividend. But let's also touch on another firm favorite that we've featured here on the show many times regarding its exposure to a variety of sectors, British American Tobacco. Just last week, this one faced a little bit of pressure here, Andrew. Is it still one that we're looking to keep in our portfolio as we enter 2019?
A little bit of pressure, I think, would be an understatement. I think it's seen some severe pressure, not just in the last week. So obviously in the last week, we had that announcement that the FDA and the US may look at banning menthol cigarettes.
And that makes it what, 25%?
The emphasis is on May. So by my calculations, it's about 20% of their business.
Sure.
They bought out that business, Reynolds, last year, I think it was. That's got the menthol exposure through a brand called Newport. But if you look what's happened to British American Tobacco, historically this has been a share that's been your safe bet, where you'd go to hide essentially. It's been a rand hedge, pays very nice dividends, very stable. It's not going to do a data tech and double overnight. Yeah. But at the same time, you didn't expect it to halve very quickly. And if you look back, the last time we had a share price movement like this was in the dot-com bubble. It didn't even retreat as much as it has this year in 2008 in the global financial crisis. So if you look at what has happened in the last week, if you think that the menthol business, or believe the menthol business makes up 20% of British American Tobacco, the share price, I think, is down about 23% in the past week. Now, if this is to go ahead, as it's been reported widely, it's going to take many years. British American Tobacco are going to have an army of lawyers. They need to scientifically prove that menthol, it makes it more difficult to stop smoking, it makes it easier to start smoking, that younger people are attracted to it, etc. This is a very long, drawn-out situation, and if it does eventually happen in 2, 3, 4, 5 years' time, are these people just going to stop smoking? No, they're probably going to just shift to another type of cigarette. So you might lose some customers to your competitors, but at the same time, you will also gain some of your competitors' customers potentially to your brand. So we just believe that the share price reaction is probably overdone, and as a result, it looks, if you're going to get a dividend yield of in excess of 6% on a single-digit P, it's very, very attractively priced. We all know the arguments around tobacco companies, But I think the investment case, specifically on what's happened this past week, is compelling from a valuation point of view.
Sure, gives us a lot to think about as consumers and investors in this particular market. But as we do wrap up the show, I do know that there are several stocks that we can definitely look at. But when it comes to the argument that we've seen South African investors constantly pushing forward is the offshore versus local exposure balance. How do we address that, Adrian, as we step into 2019? And of course, understanding currency levels, which for the moment look fairly firm, just above 14 at the moment. But of course, that could swing either way, depending on what Trump does, what happens in South Africa, or even other international politics that might have a play here.
I think there's a great temptation to try and figure out where the rand is going. That's a perennially impossible thing to do. I mean, there's instances where you could suggest that the rand is incredibly cheap or remarkably strong. At 14 rand-ish to the dollar, I think the rand still looks inexpensive. And with the right environment, the rand could easily recapture 13 or 12 to the dollar. But from an investment perspective, if you're trying to build a position based on currency, I think you're quickly in the world of speculation.
Yep.
And so rather than worrying about the fair value of the currency, rather try and get the currency allocation right. And if you lived on Mars and looked at the world, you would have about a 1% exposure to South Africa. So if you've got discretionary assets, you probably want to expose those to other industries, other countries, other markets. And that's not sort of a nationalistic or anti-South African sentiment. It's simply a basis of portfolio allocation.
Sure. Andrew, your closing remarks as we step into 2019?
Yeah, absolutely. I agree with Adrian. I think, if you also look at the opportunity set, so we talk about data tech. If you just think about IT companies in South Africa, what is your opportunity set? Data tech, you maybe going to count Naspers as an IT company, EOH, and then in the small cap space, Adapt IT. So you've got a handful of opportunities. But if you look globally, there's, in our universe, there's about 250 IT companies that you can choose from. So your opportunity set is just much, much wider. Which I think is also another compelling reason. I agree with Adrian that, from a market and economic point of view, we're less than 1% of the world. Sure. You should be exposing your assets globally, and you also need some of that emerging market exposure, as we've spoken of before. That's where the growth drivers lie.
Well, that certainly does bring us to the end of tonight's edition of Portfolio Watch and the end of this series. On behalf of the CNBC Africa team, our sincere gratitude goes to Chris Potgieter, Victor Mopunga, and Andrew Ditburner.